Hi and welcome back to Venture Cat. On this channel we talk about personal finance, travel and lifestyle, and in today's video I specifically want to talk about how to improve your credit score in order to qualify for a bigger loan amount or credit amount. Okay, so first things first, what is your credit score? Your credit score is basically a measure of how well you'll be able to pay back debt. So for example, if you wanted to borrow money from a friend, the friend knows you, they probably, if you're asking them for money, they probably should know what your relationship with money is. Like, are you the type of person who's always in need of money? Are you always asking different people for money? Because they're your friend, they kind of know you on that level, and they know probably if you have a stable job and all of those things without you actually having to give them a record and say, okay, no, I paid this person back, what, etc. Because they're your friend, they would know, and they would feel like, actually, Kat borrowed money from her colleague last month and she still hasn't paid him back, so I'm not gonna borrow Kat money. So basically that's what a credit score does. It shows financial institutions whether you are someone who's trustworthy and reliable in terms of paying back your credit. So what happens is, whenever you apply for credit, whenever you have a particular loan and you don't pay it back, or you pay it back on time, the financial institutions will send that to the credit bureau, and the credit bureau will use all of that information from all of your different lines of credit in order to calculate your credit score. In my previous video that I did about the process of buying a home in South Africa, I detailed what the steps are, and if you haven't seen the video, just check the link up here. Someone asked in the comments, does your credit score not matter? And it does, so I'm sorry that I omitted this in the last video, but it definitely does matter for you to first of all be approved for a big loan, so something like a vehicle or a home loan, and it also helps you to negotiate your interest rate. So the reason why negotiating your interest rate is very important because the interest rate, the higher your interest rate is, it means that the higher your monthly payment would be, and the more money above and beyond the actual value of that thing you will be paying. So for example, say this pillow is worth 100 Rand and I want to buy it on credit. If they give me a 10% interest rate, it would mean that by the end of the year I would have paid 110 Rand for this pillow, whereas if I had a 8% interest rate, it would mean that I only paid 108 Rand for the pillow over that year. So essentially that's what your interest rate does. You want your interest rate to be lower so that you don't pay more than you need to, essentially, or you're not just throwing away money because of a bad credit history or bad interest rate. So always negotiate your interest rates. I'm digressing. So what are the ways in which you can improve your credit score or build your credit score if you don't have one? In order to answer this, you need to know the way in which your credit score is calculated. The general model is that 5 things affect your credit score: your payment history, your amount of debt or credit utilization, the length or how long you've had credit for, how much new debt you have, and what is your mix of your debt. Okay, so the first two have the highest rating, so that's your payment history and also your credit utilization. So your payment history is self-explanatory. It means for all of the loans and credits that you have, how well have you been paying it back? Have you missed payments? Have you not been able to pay such that you had to have debt collectors come to you and you had to write off that debt completely? Or have you been paying on time? And also with this, if your debt is due on the 25th, you need to pay on the 25th. You can't skip a few days because that will also impact your credit history. Okay, so just know your payment history, so just know that. And then the second one is your credit utilization. So the credit utilization means that out of the amount of credit you have, how much of that are you actually using? The best is to stay below 30%. So if you have a credit that's 10,000 Rand, it's best to use only 3,000 Rand on that credit card so that your utilization isn't too high and the banks can see that you are not relying on debt to sustain your life. Because if your credit utilization is quite high, it means that you can't afford your life. Therefore, you are using credit, majority credit, to finance the things that you need to finance. And if you're already using so much debt, why would an institution come and give you another loan? It don't make sense, right? So if you have no credit or you have little to no credit at the moment, in order to improve on those two things, your payment history, first of all, whatever credit that you have, make sure that you always pay it back on time. You need to set up a debit order in order for that to go through. Usually, if it's a credit card and you have your normal check account with that bank, the bank can help you set up that debit order while you are applying for the credit. Otherwise, you'll have to make sure that you set up that debit order yourself. And then with the utilization, make sure that you don't spend more than 30%. You can go up to 50, but if it's more than 50%, guys, like, nope, don't do it. And then your length of your credit. So say you have a credit card, you got a credit card because you needed to buy something, you bought it, you've paid back that whole credit card, and now you're like, okay, I don't need this anymore. It's best not to close that credit card, because banks will also look at, banks or financial institutions, they will look at how long have you had a particular line of credit for, because it shows how good your relationship is with your financial services provider, and it also just shows that you are able to have credit and use it well over a long period of time, and it builds your credit history over time. The longer that you do something, the better it is, or the more someone can gauge your habits and all of that. So don't close your accounts within a year. Try to have accounts that are older than a year, even if you aren't like using it frequently, like even if you use it to buy small purchases here and there and then pay it back as per usual. New credit. So don't apply for too many new types of loans or too many new loans in a short period of time, because that will negatively affect your credit score. If you apply for a credit loan, if you apply for a credit card this month and then next month you apply for a store loan like Mr. Price or Woolworths, and then the other month you apply for some other, like a personal loan, that's going to show that you can't afford the things that you need in life, and financial institutions are going to be less likely to afford you a bigger loan, like when you need a car maybe a year from there, or you need to buy a home. They're going to be like, you're already making so many payments to all these different credit lines and you've accumulated so much debt that you're just like, I don't think so. Then the last thing is the different types of credit that you have. So if you have like 5 credit cards, it doesn't reflect well on you, because why do you need 5 types of credit that serve the same purpose? Like you can have maybe a credit card, a gym membership, a cell phone contract. The more diversified your types of credit are, the better. But then again, you also just shouldn't do it all at once, like I said in the previous point. So these last two have a smaller weighting on the calculation, so it's not something that you should be too worried about. Like you don't need to now, because you need to have a diverse range of credit, doesn't mean that you have to go and open all of the different types of credit. The most important thing in building a credit score is just to get one type of credit and use as little of that as possible. I also wanted to say, if you're going to be applying for a home loan specifically, a home loan or a vehicle loan, try not to have new credits like very close beforehand. And just a story on how I accidentally built my credit record is when I was in varsity, my wallet got stolen or lost. Got lost. I don't know if it was stolen. You don't know. I was on a train, so you don't know. Anyway, so it got stolen, and then I had to go to the bank to report it and like cancel that card and have a new one, whatever. So when I'm there, they're like asking me, what did they ask? I actually don't remember that well, but that's because I didn't understand what they were telling me. But from what I can recall, they were asking me like, do I have an allowance? I qualify for a specific type of card, and if I have an allowance, then you know, I'm able to open this thing. I think in my head I thought that I was opening a savings account because they're asking me what can your monthly debit order be, and I was like, oh yeah, no, I can afford 200, thinking I'm going to be saving 200 per month. Next thing, so I got my check card there and then like a month down the line, I think I was supposed to go collect a week later or something, and I never did. Month down the line, I get this card delivered. It's a credit card, and I'm like, oh, okay, I didn't know. It's like a student's credit card. So apparently I had opened a credit card account, and I was like, all right. So now there was a time, like I didn't use it because I never really needed it, but then there was a time when I was like, oh, I was really broke, guys. I was very, very broke, and also I was just like, let me just use this. I wanted to spoil myself. So I bought a meal at Steers, and then after that I think I tried to use the card again and it declined. Kanti, my limit is 200 rand, people. 200 rand, and then ever since then it would have a debit order, so I think it was taking like 2 rand every month. I didn't even like pay attention to it at all. But lo and behold, last year I think I checked my credit score and it was like actually very good, and I was just like, oh, okay, so that 200 rand limit student credit card really helped build my credit record. And it's as simple as that, like you just need to pay it. Because there was a debit order, I didn't even pay attention to it. It was taking my 2 rand for like 2 years. So yeah, that's what happened with me. So like basically the point of the story is that the amount of credit that you take doesn't have to be high at all. And also if you're a student, it would be advisable to open some sort of credit and just pay that back, because that helps build your credit history. And when you buy a car or if you buy a home, you're able to point to the banks or the lender and tell them, look, I've had credit before, this is my payment history, I've been very good, this is my credit score, so I think that you should give me a better rate than that, because I'm not just some stranger. Like, you have an indication of how well I can pay off debt. Alright, so I hope that you enjoyed this video. If you did, please give it a thumbs up. Comment down below on any other tips that you may have on how to improve your credit score and how to try and build a credit score, before trying to make these big purchases. And yeah, please subscribe to my channel if you haven't already. I'd really appreciate it. Okay, bye.